Hello, friends. If you are like me as a realtor, you have had multiple texts and calls from clients today asking about, and yesterday too, what the meltdown of Silicon Valley Bank and Signature Bank means to them and means to their real estate, because we are, of course, in economic times that are nothing short of just full of turmoil. Let's just call that what it is. So let me check over here and see if my audience... There goes the cord. Cat knocked down. Did you see the cat jump down? That was really exciting. All right. Hopefully you are going to hang with me here while I go live. Hey, it's always fun to go making this happen. And everything went crooked here. I don't see anything here. Oh, now I see some viewers. I don't know where y'all are coming in from because Facebook is crazy right now. So anyway, I want to talk to you about what this bank meltdown means. Now, first of all, full disclosure, I worked on Wall Street, but it's been a long time ago since I lived in Manhattan. And I do have a text thread of my old financial friends, and we've been burning it up all weekend talking about what this means in the real world. A lot of us thought that the stock markets were completely going to melt down, and they haven't melted down yet. So that's actually good for you and for your clients. And what you have to know about this is that there it comes on the internet. Let me close that down. All right. So what this means is the banks are putting the Fed into a really weird place. So let's back this up for a second and understand the big picture here. First of all, when those of us that are financial nerds talk, we look at the spreads on treasuries and we look at those yield spreads. That is not something normal people look at. I get that. And it's fascinating to watch what's happened with the yield curve. Okay. Here is why that matters. In 2008, the big meltdown that happened in the Great Recession was because there were bad mortgages out there that were tranched in. If you didn't watch The Big Short, that's probably the best movie. It's totally over-dramatized, but it's a great way to understand what happened in the Great Recession. When you look at how those underlying mortgages were bad, and now they've been bundled up to be bad, and they were then what the banks used as their financial backstop, you saw why it went down. Well, what the banks have done since that era ended of the no-doc, the stated income loans, I used that to buy my first house, but those loans are gone. The banks like to protect their reserves with U.S. treasuries. U.S. treasuries have been falling. The value goes down when rates go up, and here's why. If you bought a bond at 1% interest and then interest goes to 5%, the one you have is worthless because nobody wants to buy a bond that's only paying 1% when the market pays 5%. All right. That's the first thing you got to know about those yield spreads on treasuries. Well, the banks like Silicon Valley Bank had a ton of their money in U.S. treasuries, which is traditionally a very safe place to have your money. But with raising interest rates, they haven't been worth that much. That's the first thing you got to know, is that's the underlying thing going on that makes these bank runs happen, is the rates going up. Now let's back up and realize why rates are going up. They're going up because of inflation. And I think we all know that when the government started printing money like candy in the beginning of the COVID era in 2020, well, basically what happens is when you shove money into the market, money is worth less. I really think we need to go back to teaching this to grown-ups and young people, because I'm not sure people understand where the inflationary era came from. But it was flooding dollars into the market. Look at the pictures of the Weimar Republic back in the 30s, y'all. And so when you look at what's happened with the money flooding the market, that's what caused the inflation, because you have too many dollars chasing the same number of goods. That's all it is. It's a supply and demand factor. All right, so we started seeing the inflation really hit, and it's been hammering normal people. I mean, go to the grocery store. You want to know why I have eggs? It's because everything is up. And when you go to the cheapest grocery store and it's still up, it's really painful. Well, those numbers have not slowed down. If you're paying attention, today the CPI, the Consumer Price Index, came out and it's up again. And that's no surprise to those of us that buy things. The cost of things is up. All right, so what does this have to do with anything? When inflation is going up, the only way you stop inflation is when interest rates are higher than inflation to shut it down. That's why the Fed has been raising rates over the last 12 months, trying to get a handle on inflation. So what happens now with Silicon Valley Bank? First of all, I'm not going to take a principled stand here, although I really want to, but bailing out the depositors to 100% of their dollars is rewarding bad behavior. And I'm just going to say that because when you make everybody whole, you are saying that risk management wasn't important, and that bank had been without risk management leadership for months. Risk management matters. Ask any realtor. It's one of the most important tools that we have as agents, is to work with each other to manage risk for ourselves and for the clients we serve, because real estate's inherently risky, just like the financial markets are. Although I'm just going to point out, I think we're less risky than the financial markets. All right. So knowing that scenario, here we are in the era of 100% making the depositors whole. You notice they're not calling it a bailout, but it's a bailout when you make somebody whole when things went sideways. That's a bailout. The numbers, and people are talking about the dollars, where they come from, and it's not coming from the government. Well, the government is not a producer of anything. The government is a taker. So you need to know that. The government is not a net benefit to the economy. They do things, but they're not producing. You and I, the worker bees of the world, the business owners of the world, we produce. So when the government says there's no bailout, that the money's coming from the FDIC, the Federal Deposit Insurance Corporation, that money comes from the bank members. Oh, where do banks get the money for their fees? Oh, that comes from us, right? You're still paying this out. So just understand that it's all a word game. What matters, though, is that if you make the depositors of Silicon Valley and Signature Bank whole, you've also said you're going to make everybody whole. And there's not enough money for that, but they're going to have to come through with something, which is going to cause the government to do what? Print more dollars, which is going to do what? Increase inflation. So right now, the Fed has two choices, and there's only two roads they can go down. And if you ever wondered, the truth here is that whenever the Fed Chair Powell speaks, the markets tend to throw up, and you should probably throw up too, because the markets just don't know what to do with themselves right now. That's about the only way I can put it. So path one is the Fed says we're not going to raise rates anymore. And if you've been watching the conversation over the last 24 to 48 hours, that's a conversation. Is he going to go ahead and take the next raise to slow inflation, or stop it so that the banks won't have any more trouble with their underlying treasuries? All right, that's path one. Path two says inflation is still out of control. People are hurting, and it's a runaway train right now. And so we have to keep raising rates to stop inflation, but that's going to cause more banks to fail because of those underlying treasuries. Are you with me now? So that spread is what matters here. And I need realtors to understand this, because your clients are going to have questions about whether real estate is stable when the banks go down. Now, not all the banks are going to go down. I will say this is another reason I love small regional banks. They tend to be more conservative in their economic outlook. I don't really care for the giant banks. However, the giant banks are more likely to get federal money as a bailout when things go sideways. So you've got to always hedge your own bets and ask good questions. This, though, of all the things real estate agents should talk to their clients about, is diversification. Diversification, diversification. I mean, from day one, y'all should be talking to the people you serve about whether they want to take part of that rolled over 401k when they retire. Do they want to leave it all in Duke Energy stocks, or do they want to leave part of it in Duke Energy, a nice blue chip? People always need utilities. And then buy a nice little rental property, buy a duplex, buy a quadplex, and that property over there is tangible, and it's going to be churning out income as long as people need somewhere to live. And spoiler alert, people need somewhere to live. And we've got to make sure that we're talking to people about real estate as a part of their financial stability, because that's what real estate becomes for a lot of people, is stability. I can't tell y'all how many retirees I have worked with in my 23 years in the business who have accumulated a little tiny portfolio of houses. We're not talking mega hedge funds, fancy people. We're talking 3 or 4 houses. And then when they hit the point of being tired of fooling with it, they're ready to cash that in. Well, that has been a very stable source of income because Social Security is not enough. So I want you to think about it in that way, that what you are providing to people is stability. And here's what that diversification means. When things go wild with the banks, the house is the one thing that doesn't really go wild. We've got to be sure that we explain that. Too many agents, and I don't know who they are, I'm just going to hope that they've learned the hard way that some of their words can come back to bite them. In the 3 years of the COVID run-up, it looked like everything was just off the charts through the roof. But real estate is cyclical, y'all. And we've seen that since the last changes started to occur in the first to second quarter of 2022, when the rates went up and the markets got more stable. Well, now we've seen there's still some stability in the market, but now things are picking back up again because, as it turns out, people need somewhere to live. And that house becomes a safer haven for their money than other places. real estate is going to go up and down. So if you are a professional realtor, you don't tell people that prices always go up. That is putting just a terrible message out there that's patently false. But you should also be telling them that when things go up and down in real estate, they compress up and down in smaller increments than even the treasury yields right now or what happens in the stock market. Now with your buyers, you're thinking, but Leigh, what do I do about interest rates? What do I tell people? Well, when the Fed's got two paths, one where they stop raising rates, it's possible rates will come down as the stock market figures out what to do with these bank failures. That's a good reason to talk to the people that are thinking about buying and get them to go ahead and lock a rate or go ahead and make a purchase if they can find a house they can live with. If rates go down further, so what they should know is that if rates come down, they could refinance if it makes financial sense. Don't just tell them, sure, you can refi. Tell them that it might have to check the numbers on it because you have the equity ratios on the house have to be at a certain place and there's a cost to refi. But also rates may go up. And I do think, this is my personal opinion, I don't have a crystal ball, so who knows if I'm right or wrong. I do think rates, after we figure out how to adjust this in the market, rates are going to continue to go up because until we get inflation under control, we cannot get this economy straightened out. We're going to see too many people pushed back into poverty, and that's not healthy because what we're watching in the last several months is an increase in consumer debt. So people are taking out more credit cards and they're maxing them out because of inflation. We're seeing people do cash out refinances on their houses to get access to that equity because they need the money because of inflation. And we're seeing the default starting to rise. And I want to mention this real quickly because I think a lot of people forget that just because a homeowner has equity in their house, it does not mean they have the cash available to make the mortgage payment if the property's not paid off. And we as professionals have to talk people through all of these scenarios. It also means that, go back to this discussion on diversification in the market and why investing in real estate can be a great thing. There may be an investor in your market that wants to buy a house where there is a financially insolvent homeowner and allow them to stay put and start paying rent. That happens in marketplaces. And as realtors, you have those connections. And so be that person that's connecting people to ideas and solutions and not panicking over a bank meltdown. I'm also going to remind y'all of something. The Federal Deposit Insurance Corporation, the FDIC, had $100,000 max on accounts back in 2008, and they raised it to $250 to give more coverage to accounts. I don't think most of y'all have $250 in the bank, so you've got to breathe a little bit and realize that you do have that backstop from the banking system, but it's also a reminder that money that's sitting in the bank, you should have an emergency fund, but if you have all of your money just sitting there, it is basically a target, and you don't want that. All right, so I want you to be smart as you pay attention to the banks, and don't panic. Don't let your clients panic. In fact, get on the phone with people and help them know that there may be some changes to which bank they use. The Silicon Valley Bank is probably not something that anybody in the Concord market or Harrisburg, where I'm sitting right now, has had a conversation with. But if you're in the Bay Area, that may be the resource your clients use. Maybe find them another bank to go get pre-approved with to buy their real estate. You should be talking to your business owner clients as well and making sure that your business owners know real estate can be a protection for their dollars too. I want you to remember that too. As you're out there practicing real estate and you're selling somebody's house, if they own a business, they may want to buy the commercial real estate underlying. And if you happen to be a residential broker, you don't try to handle something you don't know. Get your relationship with your commercial realtor ready so they can help out. But think about how real estate is that stable investment vehicle, and there's no guarantee that it goes up or down. But I will remind you of this. If the markets start throwing up some more and things get wild and crazy, you may have fewer home buyers, but you'll probably see more renters because people do have to have somewhere to live. And when we have an increase in renters, we're going to have an increase in people looking for something to invest in. And not all investors are interested in the fancy schwanky stuff. A lot of us invest in workforce housing. So if you also want to be a part of the solution to any of these economic woes, we got to think about the open and price points in any market, and it's investors that you and I know, those mom and pops who provide that. And the last thing I will tell you here, as you look at the bank meltdown and you realize that the government is bailing out some very crooked executives, and I'm not going to lie, I kind of hope they all go to jail, the ones that cashed out, but I also know that corruption is not being punished in this country right now. But we should all be rising up and saying if they cashed out their options a week before this meltdown, they shouldn't get to keep the money. It should go back into the kitty. Just going to point that out. But I will say this. Whenever there is a great expenditure, the government does look to replace those expenditures with taxes. And the item they're looking at again right now, and this was published in the administration's proposal on Thursday of last week, is eliminating the 1031. Y'all, if you are in real estate or if you're not in real estate, you need to know the 1031 is a provision in the tax code that allows investors to take what they made on property A and put it in property B so they can continue being investors in the market. And we need investors in the market who are local, who understand the marketplace and provide good options for businesses and for housing. And we do not need them to get taxed out the wazoo on every sale, because when that happens, it reduces what they can and can't do. And most importantly, it keeps a lot of them from staying in the market because they'll just sit on something instead of selling it. And the last thing we need right now is a further reduction in supply, because that's not going to solve anything. All right, I don't see y'all asking any questions over here in the comments, so hopefully that helps. And if you want to get more thoughtful about this, there are some great resources out there. Of course, NAR Research has some opinions from Lawrence Yoon. There are some of us that are maybe a little less rosy in optimism about that. And if you want to know some of those accounts to follow on Twitter, or if you want to get more opinions on this, send me a quick message and I'll be glad to hook you up, because I will tell you, when markets throw up, that is not the time to quit. That is not the time to hide. That is the time to press in and start reaching out to people and making sure that they have somebody to talk to. You who are watching this, however many of y'all are on here right now, let me look. So the 64 of you on here right now are obviously the best in the business, because instead of eating supper, you are sitting here hanging out with me on live. I want you to reach out to the people you serve, because if they are watching the evening news, or if they're watching Twitter, God help them, they are probably sitting there throwing up right now. They don't know who to ask. So make sure they know that you're there, and you will help them figure out how to find some financial stability when everything else goes crazy. And just for the record, for those of y'all that want to ask me if I buy gold, I don't buy gold because I need things that have a return. And gold does go up over time, and I'm not slamming precious metals, but I'm a big fan of real estate because, first of all, it does bring in a return. And I love being a part of the solution in my community to the housing affordability needs that we have. We're not going to solve this with hedge funds, y'all. We solve this with each other, and where we figure out how to invest in our communities, and maybe, just maybe, stop supporting these giant corporations that don't have a foothold where we live. Support your local, support your banks, and talk to your legislators, because we have to get smarter about this. So thanks for tuning in, and whatever you want me to go live about, y'all let me know, because I don't go live all the time, but when I do, I will try to bring you some value, and hopefully you can take this back to the people you serve. Be good out there. And if my clients are watching this, y'all can call me and text me again, because this may or may not have made sense since I ramble, but obviously you hired me as your realtor, so you know I ramble. I'll see y'all on the other side.